Welcome to Investing Confidential. I want to talk a little bit about the European elections. They got a lot of press, but I think no one's talking about the implications. I mean, there are some severe implications to the U.S., and no one's talking about it. So let's just run through it. I want to say one thing first. I mean, I don't know if a lot of you have looked at the numbers, but you had 300 million people plus in 21 countries vote. And by the way, this was a vote for the EU Parliament in Belgium. This had nothing to do with individual countries. So every country represents parties, different parties represent. But at the end of the day, you had 300 million people, 21 countries. And the results, by the way, were instantaneous. I mean, the next day, that evening, next day. I mean, here we got in the US, the last few elections, I mean, nobody knew until the following day. And obviously, going back a number of years, we've had instances where we wouldn't know for weeks. Uh, I mean, this is a disaster. I mean, can't these can't these politicians get their act together? I mean, we should be able to vote, make election day a holiday. Everyone votes, and the next, by that evening, we should know who wins. I mean, this is a joke in this country. Uh, and not that I'm promoting Europe, but I mean, how the hell does Europe do that? And there was no claims of election interference, none of this, and it worked. Anyway, all right, let's go to the facts. So, have you heard the right wing, the conservatives, whatever you want to call them, populists? I mean, look, there's newspapers. You can't pay attention to what newspapers say, but the bottom line is conservatives increased power in the EU, right, which is in Belgium. Okay, and it was across the board. You had populist win, right-wing populist wing in Belgium. Okay, the Belgian prime minister resigned. Italy, France, Germany, Netherlands, Spain, Austria, across the board, with the exception of the Nordic countries. They're a little wacko. I mean, I'm Nordic myself. They're a little wacko, but their left wing isn't as radical as some. But at the end of the day, you had this big increase in conservative right-wing populism, right? So what does that mean? Okay, forget about the political aspects. Let's look at what it means economically, because this is what we're talking. What are the effects? First, some facts. The Green Initiative, all of this ESG, that's going to die down. Okay, that's expensive, by the way, to companies, and that's a positive for corporate profits. But all of these green initiatives, they're going to slowly die. So will ESG. ESG is probably dead already, but it's going to slowly die from a European perspective, and then probably globally. Now, the other thing is there's still an issue with power, okay? Because again, you people have realized that all these green initiatives with solar, wind, all this is good stuff, but it's not reliable. It's not you can't use it, as your only source of power. So we're going to see a revitalization of nuclear, probably, in Germany and in France is already pretty much nuclear. There's going to be increased use of fossil fuels, oil in particular, natural gas, but mainly natural gas. All of what I just spoke about above is inflationary globally. Okay. So, it's going to help corporate profits, but it's going to be inflationary. That's not great news. But what's worse news for the U.S. is that it's a global inflation theme, right? So if the EU countries finally are allowed through their politicians to be more aggressive on natural gas, more reliant on natural gas, more reliant on things like possibly nuclear. In the short term, this is going to be inflationary. Longer term, if the increase in nuclear is there, it should neutral out and become deflationary. But temporary, it's going to be inflationary globally. Like that means the U.S. Okay. Another thing that's going to happen is you're going to have decreased immigration in Europe for sure. Okay, massive. I mean, most of these populist parties ran on anti-immigration, so there's going to be decreased immigration across all of Europe. I'll mention the UK in a little bit, but What does it mean? Okay, what that means is higher wages, right? So you're going, look, immigrants come into these countries, they come into our country, they come everywhere, and they work for anything. They work for very low wages. That keeps wages down, helps corporate profits. Okay, again, decreased immigration means higher wages, means higher inflation. Higher inflation. That's it. Okay. Then we're going to see possibly deportations, which means terrorism is going to increase because you're going to get a clash. They're going to start rounding people up, flying them back to the Middle East, wherever they're from, Africa, wherever they're from. And this is going to cause, backlash. Again, terrorism is horrific. It's also inflationary. And, I haven't mentioned the UK, but UK has an election coming up as well. You're going to see the complete opposite, right? So Europe is going right-wing populism. UK is going to go the opposite. The Tories are going to be gone. The Labour Party is going to take over. That's more left-wing, social Democrats, let's just put it that way. So the UK is going the opposite. What does that mean? It's tough to say. Really, really tough to say, but it's going to create a lot of problems because I think the voters of the UK are disgusted with the Conservatives. They're not really conservative; they're just disgusted with them, and they're just going to vote for the Labour Party. And they're not going to like what the Labour is going to give them. But look, the UK is going to be a mess for a while. Okay, absolute mess, which means weaker, British pound against the euro. I think the euro temporarily is obviously going to weaken here. As you can see, I'm posting behind me the chart of the euro, but I think we're going to see the euro bottom a little bit, and the euro, from a currency standpoint, it's going to be very interesting to be long euro, but temporarily euro is going lower. Okay. Inflation. Again, I talked about inflation. All of this stuff is inflationary. Even the UK is inflationary because you're going to get higher spending, more borrowing. That's also inflationary. But let's look at it from a standpoint of stocks. So the EU, was in recession. Unlike the US, which is in recession, but the EU was actually in recession, right? You had Germany, a bunch of countries were 2 and 3/4 of negative. They have already felt the pain, and you could see that if you look at a chart of the European markets, especially Germany, they've been on a tear, a tear. I mean, every market's on a tear these days, but Germany in particular has been on a tear. They're coming out of recession. Okay, the market's already anticipated it. Unlike the SP500, the stock markets there are a leading indicator. And so this is all positive, because people are realizing that this could be also very positive for corporate margins. Now, I mentioned that labor-wise, you have a lot of the immigrants are going to be hiding, deporting, whatever. It's going to increase, but Europe's already used to high wages. Let's look at the compare and contrast. Low wage business is things like healthcare industry, things like hospitality industry, government, and specifically the hospitality industry. There is no tipping in Europe. There's no tipping. People earn a living wage. People who work in restaurants earn a living wage. They already earn a living wage. Healthcare workers earn a living wage, unlike here, where they're very low paid. So everyone earns a living wage. So, rates going, wages going up. It's not going to affect Europe as much as it will affect here. So Germany, all of Europe came out, except for the Nordic regions, coming out of recession. All of this stuff we talked about is inflationary, but for Europe, it's going to be positive for corporate margins. That's very, very good, unlike the US. So, what's going to happen in the U.S.? It's going to be, as I mentioned, you're going to see an increase eventually in the euro. This is also positive for commodity prices, okay, for energy, across the board, food, all of these things that were hindering food in Europe are going to go away. So there's going to be, a lot of regulations going to go away. So there's going to be an increase in demand for food. Prices of food are going to go up. And this is obviously going to affect the U.S. because as I mentioned, I expect the U.S. dollar to go in a steady decline over the next few years. And so again, dollar in decline, more inflation. The Fed is going to cut next month, they're going to do a cut. This is an election year. Their party's losing. They're going to do, because the Fed is political, they're going to do a cut for sure. And that probably will be the end of the rally, the end of this bull market for sure. Okay. I am shocked how this market continues up. Shocked, but not shocked. Okay. Because it's being led by a tiny group of companies. Apple just hit an all-time high today. What did Apple do? I mean, think about what Apple did today. I hate to go on a tangent, but Apple, instead of doing their own internally, all they did was they just integrated OpenAI. Nothing innovative. Again, Tim Cook, good manager, I'm not calling him great, but Apple has not delivered any innovation since Steve Jobs passed away. Nothing. Absolutely nothing. The same iPhones, the same iPads, integrate. They don't do anything themselves. Anything. And how they're making margins, by the way, is all they're doing is they're not spending much. They're not increasing, they're not buying buildings, they're not expanding, so they're not spending. And so that automatically, when you don't spend a lot of money, especially on R&D, it goes down to the bottom. This is how Tim Cook operates. Look, if you're on the stock, it's been awesome, but he's not an innovator, and it's going to catch up with the company eventually. And finally, I mean, the EU elections. Okay, we also had elections in India and a bunch of other places. All I could say is that when you look at the global population, how they're voting, how people are, well, with the exception of the UK, how people are. If you extrapolate that to the U.S., okay, it's the voters are moving conservative. They're anti-globalist. Okay, the global that's why basically the voters in the world are going anti-globalist. They're voting out the globalist. And in the case of the UK, they're right-wing globalists. In the case of Europe, you have left-wing social democrat globalists. In this country, the Biden administration are globalists. So as a prequel, if the U.S. voters are as angry as the European voters and others around the world, in South Africa as well, you can assume what's going to happen in the U.S. election is November for sure. So bottom line is inflation continues to go higher. This is going to limit the Fed. They're going to cut, I believe. They should not, but they're going to cut. It's going to be a policy error. We're already seeing a huge slowdown in the U.S., which the Fed, that's the reason the Fed's going to choose to cut. And it's not going to be good. It'll be another policy error for the Fed. But in the short term, the elections in Europe are inflationary. Okay, everything is moving towards weaker dollar, higher inflation over time. Okay, not in the very 1 month, 1 week, 1 day, but I'm talking about over time, and that's going to handcuff the Fed. And as soon as the S&P cracks, everything else will crack, including the real estate market, everything else. As I mentioned, finally, the S&P is everything. The SP 500, everything. It's everything for economics, everything for politics, everything for everything. It's the most manipulated index in the world I've ever seen in my life. It is absolute disgrace what Wall Street and others are doing in terms of manipulating one index to try to move their their agenda. Anyway, bottom line is investors, Europe looking better, more on the fixed income side and the currency side than on the equities have really run. Maybe France is something else, but at the end of the day, Europe, from an investment standpoint, is going to look better than the U.S., which is going to continue to be a struggle with global inflation. So investors, be careful out there.